Ladies and gentlemen, good afternoon and welcome. There's lots of you here and we're delighted to see you all here today. I've got three very experienced people on the stage. No lady, unfortunately, which is, I think, is a terrible shame, by the way. One of them could have been replaced, I'm sure, but with no lady today, which is a shame. However, North versus South. It's a very old question, and we'll hear some very interesting answers today. Hands up everyone who, at the moment, invests up north. Oh, we've got to be careful what we say, some of us. And how many prefer the south? Now, at the end of today, I think we should ask the same question again. What do you think? There may be a few different answers. There may not be. So, ladies and gentlemen, without further ado, let me introduce you to Paul Mahoney, Reece, Mennie, and Cam Dovedi. Now, I'm going to ask them all individually. I'm going to sit down in a minute, don't worry. And then I'm going to ask them all individually what their thoughts are of North-South divide and how they think it affects and what they do and how they think and operate. And then I'll have an opinion at the end. And of course, I'm chairman, so my opinion's only worth the same as everyone else's. And then we're going to open up to the floor, and as many of you as possible we'll obviously like to engage with and hear your thoughts and as many questions for us all as you can have. And they can be as difficult as possible, especially for these three. They can be very difficult. If you can make mine a bit easier, I'd be grateful. So without further ado, I should say, Paul, would you like to comment on your thoughts, North versus South?
Okay, so I think it's important to clarify what we're actually talking about when we say North versus South, because it's a property-based show, but there's a number of different ways to invest in property. I suppose we can only really speak from our own experiences and expertise, and our approach is relatively passive buy-to-let property investment. So when I talk about North versus South, that's what I'm talking about. We started to move more toward the north about 4 or so years ago, as we could see the London market was getting expensive, and the fundamentals, and when I say fundamentals, I mean things like population growth, infrastructure spending, job growth, wage growth, all the things that make a strong property market in areas in the north, or I don't know, can we call the Midlands the north? It's north of here.
No, you can't, Paul. I know you're Australian, but the north is the north, and the south is the south, and the Midlands is the Midlands.
So what, we just forget about the Midlands then, do we?
Well, we can talk about Midlands. We
Okay.
can both, it's the third way.
All right,
Yeah.
okay. So places like Birmingham, Manchester and Liverpool, in my opinion, from about 4 to 5 years ago, started to become the areas to focus on. And I'm glad to say that that's been proven since then, because they've been the 3 fastest growing cities in the UK over the past 3 years. I think when you consider things like net migration in the UK at the moment, very strong away from the south toward the north, a lot of that's being driven by affordability. We're based in the city in London. I look at our grads that start with us that on your average London grad wage, for them to buy a place in London is almost unachievable anytime soon. But for them to go to somewhere like Manchester, they'd be on a very similar wage. The cost of living is probably about 3/4 of what it is in London or less. And the cost of buying a nice property in a nice area is substantially less. So you can see why that young profession, who is the future of our workforce, would perhaps want to move to an area like that. And there's a lot of that happening at the moment. So I think when you combine that with cheaper entry levels, higher yields, and all of the changes in the market recently, we can't forget about things like Section 24, the stamp duty changes, and mortgage serviceability changes that we've experienced recently. All of these things are hurting high-value, low-yield properties, and in a lot of ways they're benefiting lower-value, higher-yield properties, and therefore they're benefiting those 3 cities I just mentioned. So, although I may not sound it, I am agnostic to locations. I couldn't really care less where I'm investing. I want to invest in the area with the strongest fundamentals possible, and in my opinion, it's those 3 areas that have the strongest fundamentals.
Thank you, Paul. I noticed that you're not investing in Australia. Just a
Well,
thought. I just thought I'd mention that. Reece, what are your thoughts?
Well, just following on from what Paul said, it's about talking about our areas of where we've invested and what we do. So, me personally, we invest in what we class as second-tier cities, Doncaster, Wakefield, Pontefract, and we take office conversions and turn them into...
You don't sound like you're from Yorkshire.
No, I'm from South, but for me and for our investors, we get a better yield and we can give a better yield to our investors in the north.
And do you find that build costs are cheaper up north? I mean, are you converting projects rather than just buying existing ones, or?
Yeah, I mean, up north for me, I can buy an office conversion or an office block cheaper than I could buy the land and build it for. So I'm already in front, and my investors are already in front in that instance. Up there, around 850k. Down here, same block. Same criteria, probably 2.5 million pound. That's where the difference is, and the build cost is cheaper up there for us as well.
Yeah.
But there is some fantastic opportunities down south. We've looked at a few schemes, but we just haven't gone with any at present.
Reece, you sound like you're sitting on the fence to me.
I wouldn't say I'm sitting on the fence. I'm from down here, so I'd love to do projects down here. But we work with investors, and it works up north for our investors and for us as a company.
So you're sort of up north. You're sort of voting for the north.
I'm voting for the north, but the difference with me and what Paul just said is we look at second, third tier cities. So we wouldn't look at the likes of Liverpool, Manchester. As I said, we're looking at the outskirts, really, Bolton, Wakefield, Pontefract, Doncaster, because there's a lot of schemes there, unloved office space that we can convert into resi, and it can give us the yields that we want. Okay. And we still need new homes in them areas.
Interesting you should say that, and I hope Cam's not going to steal my thunder here. So as the last one, it's always risky because everyone has said everything and then there's nothing else for me to say, but that very rarely happens to me, ladies and gentlemen, so don't worry. So Cam.
I'll say the key about North and South is actually that there's opportunity in adversity, and that's the key that we all need to remember. Whenever we're in a situation...
Mike.
Can you hear me okay?
No, Mike's
not working, but you can hear me anyway, right? Yeah. Isn't this just like life, guys? Isn't it? The ducks are never in a row. Would you agree with me, guys? So you can hear me at the back, right? That's okay. So the key is, like I say, it's about... Oh, yeah, thank you. You can hear me now. So it's an opportunity in adversity. So what do I mean by that? So it's about making the market work for you no matter what the market is, no matter whether it's the north or the south, the west or the east or the Midlands, you can make it work right now. And I suppose I'm living proof of this. So I fell into property when I was 19 years old. At that time, it was the peak of the market. Interest rates were 15%, the Bank of England base rate. Some of you
were?
Yeah, might even remember this. Some of you can't even imagine that, right? I mean, what are the rates right now, guys?
They can if they've got a bridging loan.
Yeah, 0.75%, right? Bank of England base rate. I had to make it work. So the first property I bought was basically my cousin wanting to move into a property, and I was a mortgage host. And when the market fell and it was actually negative equity, he said, "You have the keys, I don't want it anymore." So what do? You know, you want to be amicable, you know, what do you do? So I said, okay, I'll have it. And then just out of the, naivety, let's call it, and I'll keep a little bit of that right now as an experienced investor, because it keeps the doors open, I find. I decided to convert that into a HMO. I didn't know that was a HMO 29 years ago, but it was. And at the end of the month, the aim was to cover the mortgage.
Can I just say?
Yeah.
Called bedsits, weren't they, in those days?
Bedsits, yeah, you call them bedsits. I didn't put a name to them, I didn't know what to call them. I just wanted to cover the mortgage. To be fair, but at the end of the month, there was money left over, and it was if you're like me, you like to create systems, and I create a system for that. So what we find is we do the same thing at Premier Property right now. So we actually have 3 specific areas. We invest in London. I live in London. I live in Chigwell actually, so border London.
Very nice too. Yeah, that's all right for some. Go on.
I was brought up in Forest Gate. I was born in Forest Gate, so we invest in London. We also invest in the Greater London urban area, as Savills calls it, or if you're like me, you call it the M25. So satellite towns around major cities work really well. And thirdly, we also invest in the north, but never say that to a northerner because you'll upset them a lot. So, north of Watford, let's say. So, and each of them have our specific strategies. So very quickly, in London, the strategies that we're really focused on, and you guys can focus on as well, if you're not already, are permitted development and planning gain strategies. Anything with planning gain is so exciting right now. All you got to do is make sure that your numbers work. Please make sure your numbers work. And the numbers that we look at as a minimum, as a bare minimum, on costs is 33.33%. So if you can make your numbers work at 33.33% on any type of planning gain strategy, then that's great.
What's that to do? What on earth is that to do, Cam, with what we're talking about?
South. That's south.
Well, vaguely. Go on, carry on. Well, I'll let you carry on.
Some will say London is south. Well, guys, is London south enough for you guys? There's more south,
We're
but
talking about land strategy, and you're talking about land strategy. We're talking about investment and
yeah,
north versus south.
Yeah, so that's north, and then
Speak
south.
on point.
Yeah.
Can.
So the south one is, so the versus is we don't do planning gain strategies in the north. No. So in the Midlands, we invest around satellite towns where we are focused on buy-to-let strategies, where the minimum yield that we'll accept is 7%. But typically, we get around 10% on a single unit. Mm-hmm. So completely different strategies, completely different areas, but we never mix the two.
Okay.
And on the fringe, we have the buy-to-let with the potential of growth.
Okay. Is it my turn? I think it is.
I think it is.
Goodness me, we've heard some different opinions. It's very, very difficult, ladies and gentlemen, when you hear all these different opinions, but I'm now going to give you, shall I say the right opinion? Probably not. It's an opinion. So I've been investing in property 40-odd years. So over the years, I bought all over the UK as investment and also as development. The rule always used to be the south for capital gain, the north for yield. The north for yield. The south, and this is what none of you have mentioned, which surprises me, the south, there is a massive housing shortage. Massive housing shortage in the south. In the north, no shortage. Let me just repeat that. No shortage whatsoever. Unless, as Paul said to me the other day on our show, he said, that's all very well, John, but in certain capital cities, big cities of the country, there is a shortage because everyone wants to live in the centre of those places, and it's very fashionable now to live in the city centre, coffee culture, and all the rest of it, which I accept that to a point. I am a bit of a dinosaur, ladies and gentlemen, so you've got to accept that. I've been around a long time. I've seen it, been it, seen it, and done it, and all the rest of it. And I would say that the north-south divide, if you like, which I don't like the word, but it's there. And the reason it's there is because capital growth is for the south. Yield, higher yields, the north, but you won't get the capital gain unless you hit it right like Paul has, where he's gone, last 4 years he's bought in the right capital, in the right cities in the north. And like Reece has to a great extent, because he's getting I bet Reece's yield is higher than Paul's. But Paul's in a better capital growth area than Reece. And God knows what Cam's doing, because he's all over the place, isn't he? He's north, south, buying land. I can't...
I'll tell you right now, actually we're very focused. The north, guys, look out for satellite towns. Very focused on satellite towns. So we're doing typically buy-to-let in the Midlands, 7 to 10 projects on a monthly basis. Very focused. And you've got to be focused on your area. And absolutely right. You know, you don't want to be scattergun. Keep in mind, I've been doing this for 29 years, and in 29 years, we've got 3 areas. To be fair, that's probably 1 or 2 areas more than you need. Yeah? We're focused on specific strategies, so absolutely right. Got to be focused. You got to be active now, and everything I'm showing you is what we're doing, of course.
What I would say is, when you say, north-south, yield up north, capital down south, I'm generalising. There are exceptions to that rule. And Paul's found those exceptions in the last 4 years. Reece has found much bigger yields in the last few years. And Cam has done the same over the last 30-odd years. So you have to, at the end of the day, all this is opinion. It's all opinion. And I was the director of Cambridge United Football Club, a massive, massive football club, hugely successful, ladies and gentlemen. Got used to losing on a Saturday on a regular basis on the team coach coming home, very depressing at times. The manager and the assistant manager even had a fight once and had to be split up by the players on the way back from Torquay. That's the sort of clubs we played. But the one thing the manager always said to me is everyone can have an opinion. There's only one opinion that counts while I'm the manager, and that's mine. And it's the same with you, ladies and gentlemen. All of us can have an opinion, But it's your opinion that counts at the end of the day, because it's your money and it's your decision, and you cannot blame anyone else for getting it wrong or getting it right or whatever. It's all down to you, and that's what you've got to remember. So yield for the north, in my view, capital gain for the south. That's how I was taught it, how I've believed in it, and it doesn't mean I don't buy up north, because I do, and I've developed up north as well, a lot, but my gains, my capital gains, have been far outweighed in the south than they have the north over the last 40 years. Far outgain. So, are we ready to open the floor up? Are we ready to... Mr. Mike's there, look, with his mic.
Can I just make a comment? Can I just make a comment on that, John? Because
I'm sure you can make a few, Paul. Yeah, go on.
But one thing I think is important to say is I think far too many people look at the UK property market as a whole.
Yep.
And they might even look at the north and the south as a whole.
Yep.
And they're not.
No.
You really can't look at the property market from a macro perspective and have any success. You know, because you are right. Historically, the north has been all about yield.
Can you just repeat that again? Because I think people might not have heard that. Oh, was what?
The north has generally been better for yield, and the south has generally been better for capital growth.
But there are exceptions.
Of course there's exceptions, because, you know, the depths of Scotland is very different to...
I've got a big tip for
to
Scotland
the centre
later
of
on,
Manchester, for example.
Yep.
It's very important to understand that the micro components of any specific location, if you're going to be investing there, rather than just saying, well, I'm going to invest up north, let's just buy anything.
Yeah, I agree. I mean, you know, I give an example. I could go and buy all of you, and you could all afford it, by the way, looking around this room. Certainly, I could buy you all a small house in Burnley or somewhere like that, Burnley, for 20, 22, 25,000 pounds. Now, I wouldn't personally advise you to go and do that in certain areas, but you can still buy a house for 25,000 pounds. But it doesn't mean you should be doing it, in my view. But again, it's just my opinion. Someone else might say, well, John, I bought 10 for 25,000 each, and I'm delighted. I'm getting a yield of 10%, 12%, and you're wrong. But that's just an opinion.
May I share a quick hack?
Go on then. Looks like you're going to anyway.
With your permission.
Of course.
Yeah. So if you look at the PRA changes that are happening right now, something happening in the Midlands and North, which never happened before, is that we are finding at Premier Property there is growth as well. So typically the areas that we're investing in, we are finding on average 5 to 6% growth each year for the last 3 to 4 years, which never existed before. And I believe that's because of the PRA changes, because of the stress tests. They don't work in the south anymore, but they do work in the north. So it's about strategy and it's about being tactical. So if we find, and you can find, areas where you are finding that infrastructure is in place now, the beginning of the infrastructure is there. And what's happening is a lot of London money or South money is going into these northern areas and is pushing the prices up, just market, dictating supply and demand. And because of this, we are finding that, these prices are actually moving up. So it's never happened before, we're finding over the last 3-4 years, it's happening right now. So it's quite an exciting time in the property market.
And Reece, you've found that a little bit where you are as well, haven't you?
Yeah,
that the market's going up a bit.
It's the same as what you said. Like in your opinion, up north, there's not a shortage of houses, but I can't produce enough apartments or enough houses to satisfy the needs. My portfolio up north runs at a very high octane.
And that's a very interesting point. You must do a very nice job on them to make sure that happens, because otherwise,
at a nice level.
Cool. I had a flat in Buxton recently. Buxton's quite a nice area in Derbyshire, isn't it, near Manchester? But I had a flat empty for 3 months. That's my own fault, probably, because I wanted too much money for it. But
if you
the demand isn't really there on the whole.
Yeah, I understand that. But if you go into the same, if you've got your niche, it's what you're looking for. As I said, we go into second, third tier cities. There's still people, the same as in Manchester, that want to live in the city centre. People still want to live in the city centre of Wakefield, Pontefract, Doncaster. We do a nice spec there.
You're showing off now those cities, aren't you? Wow.
People want to leave home and get on the ladder. And we can't produce enough.
Oh, there we go, ladies and gentlemen. You've heard it from the experts and me. And now Mr. Mike Mann will just shove your hand right up so we can see, because we've got lights in our way. Gentleman down here I met this morning outside.
How are you again, John?
Oh, Christ. Yes,
I'll try and be a little quieter.
thank you.
So, no disrespect to all the others. It's more of a question for Reece, really.
Okay.
Nothing personal then, eh?
Not at all.
Okay.
No, no. I've heard Paul. I heard you speaking at Excel. Cam, I've heard you speaking at Excel as well. John, I've spoken to you earlier before.
Yeah, thanks.
So,
Not quite the same as listening to the other two, is it? Go on.
everyone is fantastic. Okay. Reece, you talked a lot about changing commercial to residential,
Correct.
i.e. you're buying a commercial building. What are the main things you do about that? Because it's regarding planning permission and so on. Is it easier up north or something? Or
Good question. So what we specialise is in permitted development rights. So it eliminates the planning risk. It's an application, long as there's 4 tests done, highways, noise, pollution. It's an application, long as the council haven't overruled it already. But in the cities that we work in, it's an application into the council. It's normally a 60-day process with the application, and you can convert office into residential. So there's no planning risk whatsoever.
do you need some residential around in the locality as well?
No, not really. No, it's just converting. Long as I said, the surveyor's reports and all of the reports are done correctly. It's the same anywhere. Permitted development rights is throughout the country, but there's some areas that some councils don't allow permitted development rights.
Would you say, Reece, that you were careful to, if you've got a PD rights, as we call it, on an office block in a very, very commercial area, that you'd be nervous about doing it in a very commercial area because the building societies may not lend to the end users if it's in a very commercial area?
Correct.
You've got to be careful. So that's a word of warning, I think, it's for everyone. Don't just think, Reece is an expert. He knows what he's doing. But if you pick an office building in an area that is very, very commercial still and not changing, you will struggle to get building societies to lend money on the end product. So be very careful. And my advice always is to go and talk to some building societies before you do it and buy it and say, look, would you lend in these areas? And surveyors and so on, and get some advice before you do so.
But it also depends on what your strategy is. See, our strategy is to convert and retain. So we don't look to sell. We refinance to get our investors out.
But
and we hold the
even
portfolio.
so, Reece, even if people are doing that, and that's one option, you still need to know that what you're investing
you're getting
in
involved
is
with.
going to be worth more when you finish than when you start.
So yeah, it's about areas.
At Premier Property, when we're doing developments and permit development, there's 3 specifics that we look at. So first of all, is about the area that, are the planners going to be amicable to that? So for example, a recent development we're doing right now is a shop with semi-commercial, shop with 4 flats above.
Not for sale, is it, by any chance?
No.
All right, okay.
So on either side, there is residential. So the planners are very easily giving us planning for. They gave us planning for that to build, into that, and we've created another 4 flats. So we've got a building with 8 flats because it makes sense. The planners are not fools. They will work with you, and they're looking at a common sense approach. So that's number one thing. Second thing is when we're looking at developments, we always gauge them between 1 and 10. A spectrum of 1 meaning that you can't do it, 10 being that you've already got the planning. And where we get involved at Premier Property is between 8 and 10. So it's a very strong confirmation where an architect says yes, you've had a pre-app which says yes, and it makes sense to you, and you've learned the proactive approach of it, and you say yes, and that's where we get in. So, if you're risk averse, you go for the 10, otherwise the 8. Third thing is entry level. So in the south, the entry level is higher, but there's always people with money. Of course, a lot of people here with money, which are willing to invest in you. And in the north, if you're worried about entry level, the entry level becomes easier because your price points are lower.
That's a very good
So with 3 things we look at.
But just going back to your question, with permitted development rights, there's no planning risk as such. It's a lot easier to get the application through than adding value in a plan.
And also, there's no social housing requirement either.
You do need to be careful on the finance side of things, though, because I've seen developments that have pretty much just been blacklisted.
Yeah,
you wouldn't have expected it.
Correct.
Because
agree.
Sometimes the builds are too small. There's developers out there that are making the units too small, so you can't get a mortgage on them. So if you're working with the right team and you've got the right people around you, they'll steer you in the right direction.
Would you also recommend getting a planning consultant?
Definitely. Definitely.
Always work with the best people you can find. Surround yourself with the best people. I haven't managed it today, but normally, try and find the best people, and you'll find that makes life a lot easier. And if they're bright and better than you, as my guests are here to say on the stage, even better. Ladies and gentlemen, let's have another question, please.
No problem.
Who should we pick? What about making you work hard? Up the stairs, please. On the left, right. It's good exercise for you, Steve. Up there, hang a left. That's the gentleman there. Hope it's a good question after all that. Yeah.
Yeah, hi. What's the panel's view on co-living? I mean, in the southeast, in London, there's quite a few lucrative co-living schemes. JLL issued a report last week about co-living as a growth phenomenon up north. I'm just wondering what you guys think as you're at the sharp edge.
Who wants to start with that? Paul, do you want to start with that, or Reece? Paul?
Go on, Paul.
Yeah, look, obviously it just depends on the location, whether there's a market for it. Obviously, it works really well in some locations and doesn't work at all in others. And some areas you might think it works, but there might already be loads of them. So, the whole sort of co-living HMO type stuff, that has been a bit of a buzzword for a while now, and a lot of areas that it does work quite well have been flooded. So it's a bit of a minefield to sort of navigate that and make sure that it does actually work in that particular location you're thinking of doing it. But I don't think there's much difference between the north and the south in that regard. It just depends on the specific location.
Yeah, I think it's about location for co-living. It's more big city centres that it should work in, but most of them have already been done, I suppose.
Yeah, you can easily oversupply, I think, and that's really what we're getting at. Cam, you've done a lot of this over the years.
I haven't done co-living.
Oh, right.
Co-living is a new strategy.
Right.
By the way, keep in mind that the new strategy is always the old strategy.
Exactly. There's nothing new in, by the way, like you said, Cam, we're old, but there is nothing new in property.
Talk about yourself, mate.
Well, I'm a little
I'm just
older.
getting started.
Anybody
Anybody here just getting started, by the way? Yeah, 50 is the new 21, isn't it?
Yeah.
And if you're 21, look at you. So what was I saying? I was just saying co-living is a strategy that many people think is a new strategy, and it is. But strategies are just repackaged.
I hate the
Remember
word
this, guys?
strategy, to be honest.
Strategies are repackaged again and again. They're the same strategy that people were doing 30 years ago, 20 years ago, 10 years ago. So what I like is the basics. Keep it simple, but not simplistic. Get it right, get the information within that, the detail, but keep it simple. To be fair, you only need one strategy. I'm a developer myself, I'm an investor. I have many friends that are investor developers. I could class these guys as friends, maybe.
Yes, definitely.
Right? So, everyone's got their flavor and their opinion, but you only need one, maximum two strategies throughout your life to make it really work.
Sometimes, don't you think, Cameron? I mean, I've changed my strategy. When people have sort of caught up with me and sussed it, I've gone on to a different one.
Well, it depends how we live. So I live a life of abundance. I have, with God's grace, if I'm allowed to say that, I have everything that I need and everything in my life that I need. My wife is in watching me right now, who's on my vision board. By the way, in this room like this.
She's the boss.
Isn't that shocking?
She's the boss.
You want to give us a wave?
She's the boss.
Yeah. My daughter's in here, and my extended family, my mentees,
Good.
and people that work with me are here. I have everything I need. I have enough to eat. I have a lovely home.
Next time
I have a
you get
lot
a
of
really good deal, can you pass it on to me?
Yeah.
Now, ladies
I have a
and
lot of trust.
Steve,
So it's
next
okay to
question.
share with people.
Thank you, Cam. I'm looking forward to getting that deal. Yes.
You were talking about Tier 2 and Tier 3 up north.
Yep.
And I know that that Tier 1 have actually increased in value. But do you foresee that Tier 2 and Tier 3 will follow the same way?
Who would you like to ask that to first?
I can answer. No. And Reece might disagree with me, but again, I'm speaking from my perspective of relatively passive buy-to-let investment where we encourage people to obviously achieve a decent return, but also invest safely. Invest in properties that are going to rent pretty well every day of the year, regardless of the state of the economy, and will grow at a relative, a decent rate over the mid to long term. In my opinion, there's a lot of safety in desirable, centrally located properties in major cities. That's the focal point for depth in things in demand, essentially. The further you go from that focal point, the more that depth thins, and second and third tier cities are often driven by one company or one industry.
Correct. It's about your strategy and what you're looking for. For me, second and third tier cities work because I've got no competition. All of the big developers want to be Manchester, Sheffield, Birmingham. These places, they're not interested in Pontefract, Wakefield.
Reece, you talk about Doncaster as being one of the places that you've invested in.
Yep.
And I know that there's a lot of investment that's gone into the infrastructure of the town, and it's carrying on. So surely that must reflect in house prices, doesn't it?
Yeah, I mean, it does reflect in house prices, but my strategy is different. My strategy is to buy and hold, so I don't sell. I mean, we've bought nigh on 90 120 apartments in Doncaster city centre, and occupancy is running right now probably about 89%. So, you know, we could still produce more there, but we don't look at it in terms of selling them units off. So we hold them. So yeah, you're right. The price is increasing.
But Reece, would you agree with me when I say that, you know, it's all about risk and return? So if you want a really, really safe investment, you're more likely to go with Paul than you are, Reece, you.
It depends.
Probably. Because your yield would be probably better than Paul's.
Correct.
But a lot of people who work with Paul want to sleep at night and don't want to worry.
But
which is great.
The difference with working with
some
me
of
is
yours,
you know what you're going to get.
Some of yours may be a bit livelier.
No, you get a fixed return with us.
Yeah, okay.
So you're not buying. You're not buying the property.
Okay.
So we're
no,
not
that's
selling.
another strategy.
So what I'm not selling properties in them areas. What I'm doing is giving investors or landlords a different opportunity to not deal with the voids, not deal with the tenants, not deal with the boilers going wrong. You can get a fixed return.
Have you got?
So the rule of thumb that we start with is good quality at the best price.
Yeah.
So what I mean by that is, I like to follow people that are on another level. So let's look at Lord Sugar. Lord Sugar, if you notice what he's actually buying in his commercial properties, he's actually focused on EC1. He doesn't focus on West or Southwest or North. He focuses on
He's
EC1.
also had a few problems in some of his property portfolio, Cam. So I wouldn't be hanging my hat on him completely.
No. I'm just. Am I allowed to share my view?
Yeah.
Not my view. What we're actually doing.
Yeah.
So what we do is we buy best quality at the lowest price possible, which means that we look for fringe cities, and we also look within a city at the fringe element of it, which actually works. So in the south, we are looking at the Thames Way corridor. If you look at many developers, like my good friends at Gallard Homes, for example, they're along there. If you look at, in the north, in the Midlands, so on, we are focused on satellite strategies. So there's, in fact, like a ripple effect. We never buy in a town centre because it's already overpriced. This is what we do at Premier Property. So we're always looking slightly outside that to make the maximum, to find that pivoting point. If that makes sense. I hope that answers your question.
Yes. Next question.
Hi, you mentioned it's all about risk and return, but I'd probably argue it's about risk, return and effort and stress levels, because you mentioned that you're in these satellite towns and things like that. When you start to look at these as investments over a longer period, so a 10, 20-year term, and you start to focus on that operational expense as a percentage of your rent roll. I mean, if you've got to fix a door, put a new fire door in Doncaster, or you've got to put a new fire door in Mayfair, it's essentially going to be the same cost, but as a percentage of your rent roll, it's going to be hugely different. So over a short term, yes, you can start to see nice returns, but actually when you look at this over a lifetime of a 20-year term in a property, and I'm someone who's got a portfolio in London, Manchester, Leeds and Sheffield, it's what I'm finding is actually over that long term, down in London, you start to get a lot more benefits than you would short term up north. What would you say to that?
Who wants to answer that? Reece, do you want to have a go?
Well, it's strategy again. It's what you're looking for. As I said, we give an opportunity to take all of that away from yourself, the operational risk of dealing with buy-to-lets, where you can lend your money to us as a developer. We deal with all the stress of that. The security is the first charge over the assets that we purchase.
What loans are value?
Pardon?
What loans are value?
It varies on different projects. So we can talk after, but anything up to 85, sometimes 90%, as low as 65%. depending on what the project is and where it is.
Do we get a debenture and a share charge over the company and a personal guarantee too?
Correct, in some instances, yes. Not personal guarantee, we don't need to because there's a debenture over the company, but if you wanted one, we could look at that. But yeah, we give a different opportunity to buy in a physical buy-to-let. So it depends what each individual person's strategy is and what their long-term game is and what their appetite is.
Paul,
Everybody's different.
Reece, sorry, thank you.
Yeah, okay. So I take your point so far as maintenance, and I think you'll find a door in Mayfair will cost you more than a door in Leeds. But I get what you're saying. But I think what we always look at, I know what we always look at is return on equity. So if you look at the amount of cash you need to put into buying a property in Mayfair or London in general, let's say the average London property price of 500 grand odd. And the fact that you can only borrow about 55 to 60% against that property now, given the finance changes, means you're putting £200,000 at least into an asset that's only just going to break even. You can take that same 200 grand and buy 3 or 4 properties in Manchester that'll give you a 10% net yield on your cash and is growing at a stronger rate than London is as well. Now, expenses is one thing, but so long as you're accounting for those expenses, it's noise. It's all about net returns and net returns on the cash applied, in our view. So that's our take on
Paul,
that question.
if I may just say something. I mean, what we haven't touched on, of course, is that surprisingly, there are cheaper properties in the south as well, ladies and gentlemen. There's places in the south that aren't that expensive, and if you want to get a foot in the property ladder, you do not have to travel up the M62 to do so. So I think we must remember that. So the south, there's places in the south where properties are not quite as cheap probably as some in the north, but they're not that far away from that. Where? There's places in Kent, for instance, that aren't that expensive. Ipswich in Suffolk, where I'm based, an hour from London, there's properties that, I've just agreed to buy a little house at £102,000. It's not, it's not fortunes, is it? So I wouldn't say, you could buy a flat for 50, 60, 70,000 pounds quite comfortably in places in the south. So it's not just about the north, but I just thought I'd mention that and throw it in there because it's something we haven't mentioned. Cam.
Did you catch your name, sir? Rod, yeah? So, Rod, really good question. And do you know what? Before we actually went into the northern areas, I actually thought about this myself. So what we've done at Premier Property is we've actually made...
What's your company called again? I missed it.
we're Premier Property.
Oh, yeah, Premier Property. Yeah, go on,
so what we've done at Premier Property... Are you going to do this at every question?
No, you're okay. Go on. Yeah. Just checking.
Yeah. So what was I saying now?
Premier Property.
That's it. What we've done at Premier Property is when we went into the north, right, literally the properties that we're investing in is all the things these guys have mentioned, and we've made those properties really, in real terms, into cash dispensers. What are you talking about? Let me explain. So the cash-on-cash return, yields are great, brilliant. Your capital expenditure minimized, absolutely brilliant. But the key that we can focus on in these areas is that your cash-on-cash return is returned back to you within 36 months. So what we do is we put a time frame in your cash actually coming back to you by refinancing and by money coming in. Does that make sense? Absolutely. So the capital value becomes the extra benefit, and we've got the yield coming in. And what we make sure, the key is that your cash-on-cash return becomes infinite when you've got no money in that deal. Every single deal that we do. A second, what? If you sign PG for the debt, you want to...
What happens if the market goes down 30%?
So what happens... These are really good questions.
Thank you.
By the way, these are questions I answer on a day that I do. It's called the Property Investor Success Day.
Do you want to just repeat that again, just so...
It's called the Property Investor Success Day, and it helps people to move forward in the journey. Now, to be fair, we have a maximum of 70 people in the room. I'm doing 2 seminars today. Done one this morning, one this afternoon. But anybody in this room who would like to come along, there's probably a handful of seats. I don't know exactly how many right now. Email me. My email is cam, K-A-M, @premierproperty.co.uk.
Okay, you're not going to repeat that again, by the way. So, can we have another question?
Yeah, there's one here.
Gentleman here has had his hand up for a while. Yes.
I have a small portfolio in London.
Congratulations. Very good.
And I've been trying to explore going to Manchester, Leeds kind of area.
Yes.
But one of the problems is not having local knowledge.
Yes.
And you find that, like for example, I almost bought a property just last week at an auction at Moston. So I had to phone people in Manchester who live in Manchester to find out. The question here is this.
Yes.
What I want to find out from you is that for people who are migrating or wanting to migrate from high capital growth to high rental yield, knowing fully well that capital growth in Manchester is lower relative to,
of course,
to London.
Yes.
And
arguably.
Rental yield is lower
yes.
here. What should be the primary incentive other than having to have ease of access? The incentive is the issue. Money is being made here. Money could be made there.
Okay.
It's different form of money.
Let me first, if I may come in first for a change, and just say this. First of all, anyone's looking to buy up north, get in your car, or if you're in London, you may not have a car. Paul's ordered his car. It hasn't arrived yet. Get on the train, get up to London, get up to Manchester, wherever you want to go. The first thing you do is get in a taxi. Because that taxi driver is going to tell you more about those areas than any agent will ever tell you. In 15 minutes ride, he'll drive you around the areas, tell you what they're all like, tell you which ones the police won't go to at night, which ones they will go to, and everything else. So that's the first little tip I can give you. Now, in terms of the yield, the capital growth is never going to... If you've got a portfolio in London, sir, I have to question why you want to, if you've done the hard work as it is, which is fantastic, you've got a portfolio in London, why you'd actually want to probably go up north, to be honest with you, because you've done it. Most people go up north on the whole, not always, because they can't buy in the south or they can't buy in London, so they tend to want yield, high yield in the north and so on, and they'll substitute the capital growth for the higher yield. But you've got it right. You've done it incredibly well. So I'm not quite sure why you'd want to do that, but obviously totally your decision.
Could I jump in there, John?
Please do, Paul.
So we're London-based. We're head office is in London, and most of our clients are based in London, and the vast majority of them have London properties, and the vast majority of them want to invest in the north. And the main reason I'd say that is yes, perhaps they've created equity over the past decade or so within their London portfolio, but the return on that equity, especially from a yield perspective, is terrible.
Yes, I can see.
So now that they can see that actually there is growth in the north, in the right locations, which is over the past 3 or 4 years better than London, and the yield is more than double, they want to access that equity and get more from it.
Okay.
And we're helping hundreds of people do that. You remortgage their properties in London, take that equity they've created within their London portfolio and better allocate it, both from a growth and a yield perspective, to help them work toward the actual end goal, which in general is to create a certain amount of income.
Thank you, Paul. Cam, do you want to...
I work for Nova Financial Group. That's my yeah, I'm talking at 2:50. We're hosting the drinks after.
Yeah. Coming back to your original question, how do you find the local area? So a great way that you can actually do this is by using resources within that area, such as really good letting agents. Now, if you find people like... Are you noticing the passion, by the way, on this panel? We could talk about property all day long, couldn't we?
We could. We have been talking about it for 40-odd years, some of us, so yeah.
So what you can do is find really good letting agents. Make sure that you find the independent letting agents. They tend to be the best because they're people like us. People are passionate about property, and usually they're investor developers over time have become letting agents organically. So you find a really good letting agent, and what you're going to find is if you go along to them with a map of the area, very quickly they will actually share with you, what is where and what areas to be investing in, what streets to avoid, which areas are the right areas, which are ones for buy-to-let.
That's
which
after you get out the taxi.
Yeah. That's one. So you got one letting agent. You repeat the process with a second letting agent, because keep in mind that different letting agents will have different views and points, and they'll be serving a different part of the community, if you're following what I'm saying. So if you can get 1, 2, and 3 different letting agents, and what you can then do is amalgamate the information and find the common ground. And that common ground is invaluable, because what you've really done in a morning or an afternoon is you've actually got probably 15, 20, 40, 29, you've got typically 50, 60, 70 years of experience that you've accumulated in one morning or afternoon. Then no one can pull the wool over your eyes. You will become very knowledgeable in that area really quickly.
Cam, that's very good advice. Next question, please.
Let's go to
Got a lot of people still want to ask questions, so we need to get through them. We've got 17 minutes left. Yeah.
Hi, this is for Paul. I'm just wondering, is the smart money now to still go for these first-tier cities up north, or is it time to maybe look at the close commuter towns and maybe hope for a ripple effect?
Good question. I think you need to be a little bit careful in that I assume the reason you're asking the question is if you look at the city centre, right in places like Deansgate in Manchester, they've become expensive. We've invested there ourselves, we have clients invested there sort of 4 or 5 years ago, and we've seen 60, 70% growth in that time frame.
Fantastic. That is fantastic growth.
As an investment over that time frame. But then you look at that now and you say, well, is that going to happen again? And the answer is probably no. So you probably wouldn't buy those particular properties, but using Manchester as the example, you can go 500 metres away and buy the same property for 30% less. So they're the sorts of areas we're focusing on now, the fringes of the city that are still walking distance to the centre. They still offer a very similar utility, but they're not quite in the premier location, if that makes sense.
Okay. Reece, would you, and in the towns you're in now, would you go to the next town down? I don't mean to say down, it sounds bad, but I don't mean it derogatorily, but would you go to smaller towns than you're in now in your areas?
If the opportunity was there, yes.
So if I can find you a deal...
If you could find me a developer...
You'll be happy to...
Yeah, I would look,
that's excellent.
definitely.
Okay.
And I would look at the towns up as well.
Yeah, okay.
But, it's all about your strategy. It's all about what you're looking to do.
To achieve, I agree.
If you're looking to achieve, income and growth, you need to be in top-tier cities.
That's interesting. Yeah, I can see what you're saying. Then, Cam, your view on would you say go? Would you go one step further out, if you like, from where you invest now and what you do, or are you just very comfortable with what you know?
No, it makes sense. Building upon what these guys are saying, it's 3 key words really. It's your strategy, number one.
Aren't we sick of that word though? God,
Yeah.
It goes on and on. Strategy. We need a new word, that's for sure. Go on.
That's why you need the Property Investor Success Day, my friend. Yeah. So number 1 is strategy.
Yeah.
Number 2 is making your strategy tactical.
That's 2 strategies. Yeah. Go on.
Okay. So tactical meaning. So let me clarify what.
Third one coming, isn't there? Yeah.
So if I could clarify what tactical means. So for example, if you're looking at stamp duty and the stamp duty is an issue for you, then you can look at commercial property in areas where under £150,000, as we know, there is no stamp duty. Mm-hmm. So that's what I mean by tactical. There are many different ways that you can make it tactical.
But there could be a very good reason why there isn't any stamp duty of 150,000 and below. Remember that, ladies and gentlemen.
Absolutely.
Could be a very good reason because you can't do anything with it. You can't let it. You can't, so be careful.
Yeah, you absolutely got to be careful. Yeah. Come along and speak to me. We're doing this day in, day out. Absolutely. I'll show you lots of projects like this. And the third thing is about your entry level. So, does your area actually allow you to enter into that level? Yeah, people will give you money. That people, invest with us and so on. However, people want to know that you've got a track record. So one of the things that people like about us is that case studies and things we're doing, they want to see that, as we are doing on the panel here.
Yeah.
So the third thing is how can you make it easier for yourself?
Okay.
I will help you to find you.
Thank you. Steve, next question, please, because we've got 14 minutes left.
Hi there. I'm Seneca from Dogbot Technology. I was going to ask you guys, so we've got a robot that basically creates a 1 or 2 bedroom apartment under the garden of an urban house. So to unlock value from your plot. Have you guys ever bought a row of houses as opposed to an office building, say? And if you've done that, how difficult was it?
Okay, so in the old days, and I'll harpen back to, anyone heard of Derek Hatton in Liverpool? Remember Derek Hatton? Okay, well, Derek Hatton left the council, funnily enough, at the time and became a property consultant. And he was a property consultant. And we gave him a retainer every month to find us deals and work with the Liverpool City Council to find deals. And a lot of people I know in those days, in Toxteth especially, used to buy whole streets. So they'd buy the whole street, literally, and then they get big grants from the local authorities and then rent them out and so on. So that used to happen many years ago. Today, buying big whole streets up in Liverpool, Manchester, Bolton is hard to do because they've all been broken up these days. But in those days, landlords owned 200-300 maybe houses, and they'd sell the whole street to you, you know. So that's what used to happen. Paul?
To be honest, I don't have any personal experience with doing this, buying a row of houses. You know, I suppose the difficulty with it is, as you mentioned, John, they're individually owned.
They are these days.
You know, if there's 5 of them, you buy 4, and the 5th one gets a sniff. Well, he's going to charge you a fortune for it, isn't he?
Yeah, dangerous game, that one.
Yeah. It's always going to be tough unless you're buying from 1 or 2 owners.
So you'd recommend actually trying to work with owners rather than...
I think you have to, because I don't know how the panel feels, but I think you have to, because if you manage to sign 4 up, the 5th one's going to want double, and if there's 5 in a row. So I think that's in. Can we have a question from a lady, because we haven't had many ladies ask some questions, and
a comment on
there's a lot of
that.
ladies in property.
Yeah.
So here we go. Look, lady up there.
Just a quick, may I make
Yes.
a little comment on that one?
Quickly, yeah. go on.
Because we're actually buying these now.
Hello.
We've just bought 4 properties this month, which are actually next door to each other. So they are smaller chunks of properties. Yes, they're absolutely separate title deeds, but you can buy them. Now, usually the problem is the lender. The lenders don't necessarily like you having properties next door to each other with each title.
Well, what sort of bank are you borrowing the money off? Not being rude, but...
So banking, traditional banks, yeah.
So you've got a bank
You
that won't lend
really
you
need
4
the property
properties.
investor success day. Stop it.
So you don't have a bank that will lend you 4 properties in a row?
No, because what happens is with the title, what you find is that when it's with the title, there are independent titles, and banks do not lend on, traditionally, banks do not lend on individual titles. However, there are certain lenders, now I can't give you financial advice, but I can share with you what we are doing. So for example, we're using one company, which for example, which is precise.
Financing it all as one deal? Is that why they don't?
Yeah, they don't like the fact that you've got titles next door. They don't like that. That's the fact.
I've just refinanced a portfolio for, I won't say how much, and bank couldn't care less where they all are and how many there are in a row. In fact, they want them in a row. They're very happy. When you buy a block of flats, you don't go, I can only do 5 with that one and 4 with that one. A clearing bank, a normal clearing bank, will lend you the money on the whole block. So, with all due respect, you need to change your bank. Now,
traditional banks, just check that one out.
No,
money.
Enough. Question there, please. Yes.
Hello.
Hi.
Oh.
Hello?
You're on.
We can hear you.
We can hear you.
Okay, so most people, what we do is just invest where we know, because we know the area. And I'd love to invest in the north. But my question is that how do you actually project manage it if you're in the south? I mean, it's all very well jumping in a taxi. You can find the area. You can go and do all the research. You've got the money to invest. And then it's right, okay, so you buy something that needs a lot of work on, and we're builders ourselves, so I know how to do it, but how do I actually...
Well, that's a really, really good question. Who would like to answer that? Reece, you get your hands dirty up north.
Cool.
Yep.
Personally, I would stick to where you're working. If that's where your team is and your builders, and you've got your team there, I'd own in.
But it's expensive.
It's expensive, but is it working?
Yeah.
I'd stick to what I know.
But it's slow.
Same as what I do.
Slow because you have to wait for the house to be done before you can release the funds, because we buy and hold as well.
Yeah.
But it sounds like you get much higher yields in the north.
You do, but if you've got to build a team up...
go up there, and I've got no team up there, I don't know.
That's the problem. If you've got to build a team, it becomes
if I can say what I do, because I buy up north and I'm refurbishing, 8, 9, or converting 8, 9 flats in Buxton at the moment and bits and bobs. And what I tend to do, I get to know local people, I get to know the local builders. If I've got a planning consultant architect on job, I find out who they trust and work with. I then meet them, I then talk to 1 or 2 people who've worked for, find out, get some good recommendations, do a fixed price contract so that there's no jiggly-pokery, full schedule of works, fixed price contract. Let's get on with it. Yeah. Okay, we know they're going to be a month late, but 2 months late, but we can cope with. That's the best way of doing it. Individually on a small house, I agree that's harder to do, and I wonder if Cam's got any ideas on if it's one house, Cam, up north, how would you look to refurbish it?
Well, we refurbish typically 7 to 10 every month.
Yeah.
And it's actually a very good question.
Very good question.
Very good question. So what we look for, number one, so my sources, I train people in sourcing, finding properties. So I've got a couple of guys who actually live in London, in Kent actually. And what he does is I've created a system for him where literally the thing is you don't need a lot of time to invest in that area. So he travels up once a week. Sometimes it's once every fortnight. We call it the eyeball check, just to see what's going on. And really building upon what you said there earlier,
Yeah.
you know, having that local team
It's very important.
is really valuable. I mentioned letting agents. Having a good letting agent who actually will help you to build a team.
Yeah.
So
they'll find local builders. They'll know local builders who they work with already, so it gives you a good start.
100% right. So that really helps, and you can really manage that property because the myth in property is that you need a gazillion hours, you know, to actually make property work. No, you don't. You know, most of the time, especially in developments and so on, you're waiting for things to happen. So you know, your time is about making it effective, and you can do this part-time. I mean, I help so many bankers who say, "Oh, Cam, how am I supposed to do it? I haven't got any time." They're buying properties in their lunch times because they're working with that time effectively. Half a day a week, half an hour, couple of hours in a week, you know, you can focus it. So that local team allows you and helps you to make it work for you in a distant area.
I want to make a comment. So, you know, as someone who's sort of buying and doing heavy works or even just renovation, and you want to do the works yourself or at least be heavily involved in it, that's obviously going to be a bit more difficult if you have to be on site. You can find a team, but we get a very similar question from, you know, professionals who are time poor and do want to invest in the north, for example, and say, well, I just don't know the north. How do I go about knowing it and getting to understand it? And you know, not to, I'm going to plug my business, but that's exactly what we do, is we give the right information to our clients to help them make more knowledgeable and educated decisions about something they probably would have found difficult to do themselves just by, you know, doing internet research, for example. It's about taking away the guesswork that often goes into making decisions about a new location.
Can I just say, you're very kind to do all that.
Oh, no, I'm lovely.
Amazingly kind. One more. Last question, make it a good one. That's what I used to say to the kids in the car when they've asked 10 questions. I said, there's one left. Make it a good question before we get there.
Hopefully it's a good one. And I think you've touched on it as well, Paul.
Yeah.
Is it Paul? The guy in the red
Paul.
tie. You said you've had good gains in the north, particularly Manchester, Liverpool and Leeds, I believe. Where do you see that going in the next 5 years? And what other areas should we be watching out for in terms of growth over a similar period of time?
Okay. Well, as I mentioned before, I don't think you can pull all of those locations into the one basket because there's different driving factors and they're each at a different point in the cycle, if that's what you want to call it. I think Birmingham and Manchester are at a similar point in that the centres have got expensive, and that's why we're more so looking at the slightly further out, cheaper locations that are still, you know, very much walking distance to the centre. In those areas, I think there's just as much growth potential as there has been in the centre over the next 5 years, for example. And we can see that already happening through, you know, what's often referred to as the ripple effect. Liverpool, capital growth-wise, is a little bit behind, and I think that will catch up. And when you look at things like job growth and population growth in Liverpool over the past few years, that has to have a big impact, and it hasn't really had a major impact yet as much as it has in the other two cities. And I'd say Leeds is one to keep an eye on now as well, in that there was an oversupply of properties in Leeds city centre. That's now been, that's caught up, and I think that'll be the next sort of growth city over the next few years.
Reece, your thoughts?
Exactly what Paul said, really. There's not much more.
What about the south? There's places in the south that aren't that expensive. If you're just over an hour from London, by train, they're the properties. So they're the cities and towns I would be interested in the south, because we've been very north oriented.
Yeah, we are very north.
And actually, like I said, there's nothing wrong with the south. An hour or so from London by train, hey, takes you sometimes an hour to get here from the other side of London. So, there's places, great places.
I just think
like Ipswich. Like Ipswich, sir, where I come from, and other places like that. But there are, Kent, there's Lincolnshire, there's Peterborough, there's other
Croydon's probably a place that I think will do well.
Croydon.
Sorry? Croydon?
Croydon, I don't know much about Croydon, but I mean...
the problem you've got is
with
the south is when the growth that you was seeing, you're not going to see anymore. Wherever you buy, you're not going to see what you've seen historically.
No,
in my opinion.
not for the moment.
For a long
Right.
time.
When you consider the fact that property prices are about 12 times the average wage in London.
Okay. Cam, just briefly, and then I'm going to ask you all one question, if I may, before we finish. You go first. Quickly, Cam.
So to answer this question,
please do.
so specifics, look at Rightmove,
Yeah.
look at properties under the value of 250,000.
Yeah.
When you look at that, what you'll find is that those properties become in the realms of what you can actually purchase, where you got a good yield and you got some growth in there. So you can find an area. So that's a really good place to start.
Great. That's your best answer so far, because it was quick, concise, and accurate. Very, very accurate. Now, I'm going to ask the panel and myself one question, because I think it'll be good fun for everyone, and that is, if you've got 100,000 to invest today, in 10 seconds, where will you go and invest it? 10 seconds, Paul. Quickly, that's 5.
All right, 2-bedroom apartment, half a mile from the city centre in Manchester.
Very good. Reece?
Lend it to me and I'll get you 12% return.
That's not what I asked. I'm dreading this. I'm dreading Cam's answer. I tell you, it could be anything.
There's so many things.
We know it's got Premier in it somewhere.
Yeah. My company's Hunter Jones, by the way. I haven't got it out there yet. Everyone else is.
Right, guys, 100,000, right? 100,000?
100,000.
Oh, this is so exciting. Right, 30,000 you could put into service accommodation, which will get you 8 apartments rent to rent. 30,000 goes into a buy-to-let, which builds your track record. Now you can talk to other people. They'll give you money because they know that you got a track record and they trust you.
That's
the other 60, how much is left?
Not
30,
long.
30,
Not
40,000. 40,000 you invest in
Not
fringe
much.
areas, satellite towns, where you got that growth and you got that yield. Now you got HMOs coming in, such as student accommodation, 15 minutes within that distance. No matter what campuses are being built, you can actually make it work. There you have your track record. There
Ladies
you
and gentlemen,
there you got as much money as you need.
Thank you for that. Now, if I had £100,000 and I was feeling brave, I would go and buy 5 flats. You need to write this down, madam, in Lanarkshire, which is just out in Scotland. And for that, you can get a 20% yield on every property. Lanarkshire. That's the tip for today, ladies and gentlemen. Now, may I just thank Cam, Reece, and Paul, because I think they've been great sports. Thank you very much.